Dollar CAD is trying to break out of this daily bullish, bearish trend. It's actually taken out the lows of this um, channel between here and here, which isn't necessarily bearish, but it is raising the prospects of a move lower. Much will depend on the data tomorrow. We've got this week has been pretty good for the US economic calendar, and it raises prospects of two hikes from the Fed this year. So that's all a bullish. But um, as I said, the CAD is trying to firm up below this channel, this box, and in doing so, it leaves things a little bit peculiar with regards to the fundamentals and the technicals. Overall, we're in a bullish we're in a bullish trend. Well, we're breaking out of that trend as well, you see. So now this move has been built up over time on prospects of the um, Federal Reserve actually, well, pausing and potentially staying on hold for some time to come. But things have started to flip, um, and that's why we've seen the dollar starting to come back up into this, all these shorts. So this is a potential short squeeze in the making. So this has dragged breakout traders to the downside. It's a possible trap. And if this dollar continues to firm, then the upside is favored, obviously. Now, what we can go with, rather than trying to second guess what's going to happen way into the future, we can look at the here and now and see that we've got this W formation and we've come up into the resistance here, a little bit higher into that, starting to correct, and this could correct into the neckline, back to the origin of that impulse. Wouldn't be surprised in that. So drawing that, we have that resistance area there, which could be support area, depending on your broker where to draw that line, but roughly around about 131.80, nice round number, and that would coincide with a 61.8 correction on the Fibonacci scale. That's on the daily chart. We can monitor this impulse for a deceleration, and we want to see that trend line broken on a lower time frame. So let's head down to the 1 hour chart and see whether there are prospects of a correction. So drawing it from the low thereabouts. Now we can already see that this trend line is broken on the hourly. So that is a bearish factor playing into our bearish thesis. We have highest high was over here, so we've already got the break of that structure point there. Again, bearish. So we've come up, we've come down into that. The lowest point, really, well, there we go, it's being met by today's correction, is there, acting as support. So 132.40, call it, is a supportive area. And we can draw our Fibonacci on this move and wonder whether we're going to get a correction into that to fuel the downside. So we might be coming up into the Fibonacci scale, maybe as high as a 61.8 to come lower, which will be the fuel to head in towards our target area. So that's worth monitoring. Let's move that to the, let's move this Fibonacci scale to the right so we can see what's going on. The price of dollar CAD. So 132.60, 132.57. So let's go into the 15-minute chart and see if we can see any structure. So we have a price imbalance between here and here on the chart, which may act as resistance or it might be mitigated in a correction. So either one of those, whether it's resisted or mitigated, we're going to be looking for a slowdown in the correction for the move lower. To break this support. Now you're going to have liquidity all below here and above there. So that could be a supported area as well. So we'll just draw that as a box. Potential support. So the scalp would be the impulse correction and then sell off. So you'd be looking to place a sell order somewhere in here for that move there. And you conduct that on a lower time frame, maybe the 5-minute. That will give you additional structure to base from. So again, you've got an imbalance in the 5-minute between here and here. So that's one idea in terms of playing the downside thesis. And then beyond that, you're looking for a move all the way into here. So that might be a scenario that could play out over the next few sessions into the close of the week and month in that regard. On the other hand, coming out to a different chart, so it's nice and clean. A break of the, well, a break of these highs would be obviously invalidating the bearish thesis. Opening up prospects of a move right up into all of this area. Okay. So on the daily chart, this could continue up on a break of these highs up into here. We've come up to mitigate whatever imbalance was between these lows and lower. So we're taking that on at the moment, which again, adding to my bearish thesis that this is a resistance area for the move lower. But again, if we do continue higher, then so be it, and we're heading up into here. In fact, you've got these you have stops above here as well. So 133.50s. Bearing in mind, again, as I said before, we're on the backside of this bearish trend. So the overall thesis is starting to look bullish in that respect. So what I'm thinking here is this is a trap, end of month, move higher. So this is the end of the month, so move up, assess things from potentially the middle of this range. So you've got, I mean, on a weekly chart, what does that look like? The weekly chart, it looks like this. So I move up, so the correction is underway up into the middle of the range, potentially to come lower, depending on how the data flows and sentiment around this week's data in the US and the Fed. And we've got next week's non-farm payrolls for both Canada and the US. So the Bank of CAD will be coming into vogue as well. So if that's the weekly thesis. So correction, breakout, trapped, move up, assess things, and then for that to occur, we could see this scenario on the daily chart. So W formation, correction, there's our shorting opportunity on the lower time frames, meeting support, moving up. That's another trading opportunity to be buying the correction in here. So selling on the lower time frame, buying on the daily chart at that point, and leveling off to assess the playing field in a 50% mean reversion into higher resistance around about 133.50, 133.80, and taking it from there.